Hi, I'm Pattu from FreePinCal. In this video, let's review the performance of Kotak Standard Multicap Fund. So this is a fund that can invest across market cap, can invest across large cap, mid cap and small cap. It can invest across sectors, but it wants to have a focus on a few sectors that it believes will grow in future, and it can have a blend of growth and value style of stock picking. It had much more mid-cap and small-cap exposure in the past, but it now more or less is a kind of a large mid-cap-ish kind of fund. And it was earlier, the reason for that will become clear in the next slide. It was earlier known as Kotak Select Focus, and the SEBI categorization rules has not affected this fund too much. Although the focus bit of the focus on a few sectors bit has kind of come down. The reason I'm making this video is I was playing around with the value research fund selector, and this is a snapshot, and you can see that I've selected all equity funds, and I've sorted the AUM, the assets from high to low, and look at the fund that has got the highest assets among all equity funds, excluding the hybrid funds. So the aggressive hybrid funds. Look at that. Kotak Standard Multicap has got the highest AUM under diversified equity fund. I was really surprised by that. I mean, I didn't expect that. So that's the reason I want to check that out. I want to find out how this AUM grew and whether this AUM had any AUM growth had any impact on its performance. So let's look at the AUM growth, and these data is from the fund fact sheets. The links can be accessed from my blog post, which is in the description box. So on 31st January 2016, it had only about 3,800 crores. After 1 year, it became 7,800. And after 1 year, it became 17,842. Wow. And as per the last published fact sheet, it's like 21,469 crores. That is crazy. So between 2016 and 17, it is more than double. Between 17 and 18, it is more than double. That's like almost 6x growth from 16 to January 2016 to 2018. That's huge. Now, I always keep saying large AUM per se is not a problem for a fund, but when that extra AUM comes in suddenly, then the fund manager may have difficulty in finding opportunities and sticking to the fund mandate. Whether that has happened to this fund or not is something that we need to look carefully and check. So these are results from my monthly mutual fund screener. I've been talking about this in the last few videos. You can check them out. So I have compared Kotak Standard Multicap versus Nifty Large Midcap 250. Now Nifty Large Midcap 250, it's midcap, the D is missing, sorry. The Nifty Large Midcap 250 essentially is, it takes the Nifty 100, the top 100 stocks, which are large caps, takes 50% of that, and it takes the Nifty Midcap 150, which is the typical midcap universe. So 50% of Nifty 100 and 50% of Nifty Midcap 150 is Nifty Large Midcap 250. So I have used that as a benchmark for Kotak Standard Multicap. Of course, the fund itself uses Nifty 200 as its benchmark, but if it outperforms Nifty Large Midcap 250, we can more or less be sure that it would have also outperformed Nifty 200. So these are the results. And over 1 year, the fund has bet the index about 72% of the time, and it has got a downside protection consistency of 77%. This means that if you look at monthly returns, then the fund will fall. When the index falls, then the fund will typically fall less than the index 77% of the time. So over 2 years, it has bet the index in terms of returns 77% of the time, and with 96% downside protection. Over 3 years, 89% return outperformance and 100% downside protection outperformance. 4 years, 100% return and downside protection outperformance. 5 years, again 100% in terms of both. But notice that for 1 year, we are looking at 1,200 data points. 2 years, 967. 3 years, 722. 4 years, 476. And 5 years, 234. So the number of data points have come down. So we do not have too much of 4-year and 5-year data because we are looking at direct plans. But well, that's what we have. And over 1 year, 2 year, and 3 year, where the data is much more significant, the fund has done quite well. So there's no problem about if you look at the fund like this. But what this data is missing is See, it has got, if you look at over 1, 2 and 3 years, the return outperformance is 72%, 77% and 89%. Now, most of this outperformance could have come before the AUM increased, right? After the AUM increased, the outperformance could have decreased. Is that the case? That's what we need to find out. To find that out, we need to actually plot these rolling returns. So in the article, I have shown all the 1, 2, 3, 4 and 4 year rolling returns. I'll just show a sample of 2 and 3 here. So we are now looking at 989 2-year rolling returns. This means that there are 5 graphs, 5 colored lines. Each colored line has got 989 data points, and each data point is a 2-year return. So the red line, which you barely see, is the Nifty 100 TRI, which is the large cap. The green line is the Nifty 200 index. Total TRI means total return index. That is, the dividends that are coming from the stocks are assumed to be reinvested. The blue line is the Nifty large mid cap 250. The Nifty next 50 is the white line, and finally the pink line is our fund Kotak Standard Multicap. So just pause the video and have a look at it. Notice that so we are looking at an outperformance. So let's consider the outperformance with respect to Nifty 200. That's the fund's benchmark. Notice the gap between the pink line and the green line here. During this period, the fund has comfortably outperformed its own benchmark, Nifty 200. But as we keep going, notice that the outperformance gap has fallen down significantly. And notice that it's almost, the fund and the benchmark are more or less together. Can you see that decrease in the outperformance gap? So although we are looking at the rolling return outperformance consistency, most of that consistency came in 2014, 15, 16 and 17. The AUM was quite low in this period, but after the AUM suddenly increased, the outperformance has come down. Of course, you must be very careful. Correlation and coincidence does not mean causation. Just because two things are happening together, just because the AUM increase and the outperformance coming down are happening together, does not mean that they are related to each other. That is something that we cannot say, but that is something that as an investor in this fund, one should be a little careful about. So this is the rolling risk. In the previous graph, you looked at the rolling return, and this in every color there are 980. Every colored line there are 989 standard deviation or rolling risk calculation, or the volatility as it's called. So the standard deviation tells you for a 2-year period, it looks at the daily return of the fund and the index, and how much the daily return fluctuates with respect to the average daily return over the 2-year period is what is measured. So the higher the curve falls, the more riskier the fund. Typically, you can see that the Nifty Next 50 is a very risky index. That's why the white line is on the top. Notice that the pink line, which is the fund, is the bottom. So that's a very good sign. So you're paying the fund manager not to just get good returns, but you're paying the fund manager to get good returns at lower risk, and the fund manager has delivered that. So notice that the pink line is lower than the green line and the blue line, which is the two indices we are concerned about. So that's quite fine. Now let's look at the rolling returns over 3 years. Now again, if you look at the rolling return over 3 years, look at the gap between the fund, which is the pink line, and the green line, and notice that the gap has again shrunk down. So over 3-year period also, you can see that the performance has come down in the last few months. So the question is too much AUM too soon a problem for this fund? Now this question, I can give you an answer, but it is a speculative answer. One way to check is, we look at another fund in the same category, which is as good a performer as Kotak Multicap, and that fund is the Mirae Asset India Equity Fund. I am an investor in this fund. This fund only has about 9,000 crores, I think, or so. It doesn't have too much AUM. So I have plotted the 3-year rolling returns on the top and the rolling standard deviation for 3 years at the bottom. Now our fund, that is the Mirae fund is the white line. The Kotak fund is the pink line. Just concentrate on the pink line and the white line. So notice that you can see that the pink line is kind of above the white line in these periods, but then the pink line has fallen below and they are more or less comparable now. So could it be AUM? I don't know, but there is a suspicion. I have a suspicion it could be that the sudden influx of money into the fund could have caused a dip in performance. That's my suspicion. But risk-wise, if you notice that the pink line is significantly below the white line, so compared to the Mirae fund, the Kotak Standard Fund is very good in controlling volatility, and that's a wonderful sign. So all that is fine. What should you do? If you are an investor in Kotak Standard Multicap, please stay invested. Keep an eye on the performance and look at the AUM swelling also. The increase in AUM. I don't think the AUM will grow as much as it has in the past. Just 1 or 2 years of sideways market, then the AUM will become stagnant in most funds. So I think that's also going to happen here. Don't worry too much about it. What you do is you review the fund performance from the day you started investing and give 3 years for the fund to perform. If you think the fund has not performed according to your satisfaction, that it has not bet the index, that's what I mean. If it has not bet its own benchmark, Nifty 200 TRI, then sell the fund and move on to another mutual fund. This is a simple way to do it. I will discuss next week on how to review a fund with very simple steps. We will look at that video next week, maybe a couple of days. So that's what an existing investor in Kotak Standard Multicap should do. I do not have this fund. Is it worth considering to invest in Kotak Standard Multicap? If you are asking this question, I will ask you a question. Do you really need this kind of fund in your portfolio? Do you need a multi-cap kind of fund which can invest across large mid-cap, large and mid-cap? If you don't need the fund, don't worry about it. If you think you need such a fund, many people don't actually need such a fund. If your answer is yes to this question, then I would say don't start investing in Kotak Standard Multicap. Choose some other fund, maybe the Mirae fund or some other fund in the category, because I think the AUM is too much already, and if you are going to enter at this point, I don't think the fund can. Already the fund is not able to reproduce its past outperformance. So I don't think that's going to happen in future also. So I would suggest that new investors should avoid Kotak Standard Multicap. So that's what I wanted to say in this video. If you want me to review a fund, let me know in the comments. I usually choose funds which has got large AUM. See, what I do must also be seen not just by subscribers and readers of Frequent Cal, but also from Google and YouTube searches. So I typically choose funds which have large AUM, but if there's anything interesting, I will look at it. I've been asked to review the Motilal Oswal funds, the focused funds 35, 25, whatever. So I will have a look at that next week. If you have any other fund, if you have any other questions on reviewing mutual funds, I will be happy to answer them. Please, people want to know what kind of funds to invest in at all times, but I'm more interested in the question, how do I review the fund performance? I think that's more important. So I'll catch you in another video. Have a good week ahead.